As we head into the last quarter of the year, we wanted to share with you some market updates and some timely insights before we flip the calendar to 2025. The biggest news recently would be the 50 basis point cut by the Federal Reserve a few weeks ago. This rate cut is attributed to declining inflation data as opposed to a rate cut based on poor economic outlook. Money market rates have dropped into the high fours despite being in the low fives for well over a year. Regardless, we're still sitting well above the 10-year average for yield on money market funds.
While the technology sector and the NASDAQ that have led the way for much of the past year and a half plus have started to cool, the Dow Jones Industrial Average has recently hit new highs. This disparity flip could stem from a few different things. Some may be taking gains on these stocks that have risen up so much over the past couple years, while others may be shifting into more stable dividend-paying stocks in anticipation of a dip. We are still anticipating a stock market dip in the near future, but if this does happen, we see the market coming right back up before the end of the year. There are a few important metrics we are paying attention to as we're moving into 2025 to see how cautious we want to be as the new year begins. These include rate cut expectations, market cap and sector leadership, and the closing levels of 2024 as the year closes out. While many will point to the presidential election as a reason to be more cautious or aggressive in the markets, who is ultimately our next president does not move the needle as much as how the Congress and Senate races play out. Usually, a divided government means the status quo will remain in effect, and this is the expectation as of now.
Because of the last and expected Fed rate cuts, mortgage rates have dropped from their high in the fourth quarter of last year. They're currently at their lowest levels in 18 months, but a further drop is expected. So if anyone is looking to refinance a recent purchase, while rates have improved, we do expect them to continue to do so in the near term. As a reminder, the deadline for filing your taxes is coming up soon on October 15th. We typically always recommend to clients to extend their filing out, as so many companies continue to get later and later with the arrival of their tax documents, especially with K-1s.